Hi, this is Melissa, the insurance exam queen, and this video is going to be about the benefit period on disability policies. So the benefit period is the time that the insured can collect a check for each disability policy. And when you buy your policy, you choose what you want your benefit period to be. You can choose 2 years, 5 years, 10 years, lifetime. It's up to each individual consumer. Now, the benefit period doesn't mean the length of disability, because if you chose, for instance, a 2-year benefit period, what you're saying is that the insurance company will pay you for up to 2 years for each disability that you have. If your disability lasts for 3 years, you're still only going to get a check for 2 years. And so when you buy your policy, you got to be careful. Am I only worried about 2 years, 5 years, lifetime, whatever it is? Now, if your disability is big enough and permanent, if you're probably going to be able to sign up, for Social Security disability, and most people kind of just want an individual private disability policy to make sure that while they're waiting for Social Security, because it's a long process and it's a 5-month waiting period. On Social Security, you're not going to receive any check for at least 5 months on that coverage. So you can buy your own personal individual policy to cover yourself in that meantime, or in case the disability you have doesn't match the definition of Social Security disability, which is a disabling injury that is expected to last 12 months or more and or result in your early death. If you have a small disability, not small, but short, like if you break both of your legs and you can't go to work, you're going to heal, you're going to get better. You're not going to need Social Security disability, but you're going to need something for a paycheck, and that's where you can buy an individual disability policy. So individual disability policies or group disability policies come with a benefit period, and that's how long the insurance company is willing to send you a check for as long as you are disabled. So in this example here, this is the date, this is the start of the injury. And the first thing that happens, so once you are injured or disabled, or the injury that leads to being disabled, or a sickness that leads to being disabled, you begin your elimination period. And that's a waiting period. It's a time deductible. Watch the elimination period video if you need more help with understanding that. So you have your elimination period, your waiting period. Once that's over, you click into the benefit period and you can start receiving your check. Now, again, the benefit period could be 2 years, 5 years, lifetime. It's whatever the customer chooses when they sign up for their policy at that time. Now, the benefit period pays in arrears, which means when you're not so the elimination period is a waiting period. So this could be 30 days, 60 days, 90 days, whatever. The end of that elimination period doesn't signal my first check. It signals that I'm now in the benefit period. But the benefit period pays in arrears, which means they pay for each check you get is for the month before. So if I start my benefit period here, I'm gonna have to wait 30 days of being in my benefit period, and then the next month they'll send me a check. So like if you're disabled in August, you have your elimination period. Usually the elimination period is 30 days. So you have a 30-day elimination period. Then you click into your benefit period. You live all of September with no check coming in. And then in October, you'll get a check for September. And in November, you'll get a check for October. And in December, you'll get a check for November. So if you do get better and go back to work, you'll still get 1 more month of check from your disability policy after you go back to work, because they're paying in arrears. Now, one of the biggest things to understand on the exam is how the benefit period impacts the premium. So when a customer signs up and buys their policy and they're deciding on how much premium they can afford, you can change your premium amount by choosing a different benefit period. The longer the benefit period, so if you choose a lifetime policy, which means that the insurance company is willing to send you a check for the rest of your life, and technically lifetime means 65, because at that point you can collect Social Security retirement. But anyway, so the policy goes to the oldest to your 65, but they're willing to send you a check until you're 65 years old. That could be a pretty long time. If you're disabled when you're 30, they are signing up to send you a check for 35 years. So that's going to result in a very big premium. If you were to choose a shorter period, like 2 years, at most, for each disability you have, they're only going to send you a check for 2 years. So even if you're still disabled beyond the 2 years, their job is done. They don't need to send you a check after the end of 2 years. So by having a short benefit period, it's going to result in a lower premium. So each individual, each customer can decide what works for them. But for your state exam, it's so important to remember long benefit equal higher premium. The longer the insurance company is going to send you a check for each disability, the bigger your premium is going to be. The shorter that they're going to sign up to send you a check, the lower your premium is going to be. And I'm going to do another video comparing benefit and elimination period and how it impacts the premium, because that is a big concept on the exam. If you have any questions at all, or if this video has helped you at all, please drop a comment, like, subscribe, and share with anyone else who's taking the state exam, and that supports me too. And if you need any additional services or help, you can find me on Facebook at Insurance Exam Queen. I've got study cards, and I also offer personal tutoring to make sure that you pass the first time or the next time, wherever you're at in your journey. Have a fantastic day.